Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show. That's right, February 6th, 2021. It's Bob Marley's birthday. We got the good vibes going today, and we're definitely going to be talking about real estate. We got the king on today with us. Joining us, of course, is Joe Muck in the regular panel. Hey, Joe, good morning.
Good morning. Thanks for having me. Excited to be here. Big weekend. It's freezing outside, but that's all right.
Fantastic. Of course, we got Harry Glanz joining us on the Zoom broadcast this morning. Hey, Harry, good morning.
Good morning, Harvey, and good morning, everybody. Harvey, that was really cool, low-key, great vibe, intro music for this great show we're going to have today with everybody on it.
Well, good vibes always, Harry, to everyone out there. Of course, we've got Becky Alley joining us, too. Hey, Becky, good morning.
Hey, good morning. One love. I love it. That was a good intro. I liked it.
I'm so happy you guys are into the little vibe scene we got going on. But of course, we're going to celebrate Bob Marley's birthday because peace, love, and happiness and all those good things going on out there and buying real estate. That'll make your wife really happy with Valentine's Day around the corner, Joe. We said we're not going to talk football. So instead, we'll give you 1 hour of the Hardcore Mortgage Real Estate Business Show. Again, we do take your calls, 248-539-9797. Joe, the market is hot, hot, hot.
Yeah, it's insane. So, we do have to make some football references because tomorrow's the biggest game of the year in the NFL. And so Tom Brady it'll be his 10th Super Bowl. So here's some things that Tom Brady's been to more Super Bowls than listings. There are less than 10 listings in South Lyon right now, under $500,000. There's less than 10 listings in Northville schools under $700,000.
Wow.
Less than 10 in Milford under $1 million. I mean, I could go on and on, guys. Like there's no listings. 5 here, 8 there, 12 there. It's a seller's market, and it's tough for buyers. And people like you guys help us get those deals done when the buyers are out there. Becky knows for a fact that her and I have done a deal because we were doing it with Becky, with Capital Mortgage, because there's a hot market, there's multiple offers, and you have to do whatever you can do to prove that you're the best buyer out there. It is a hot market for sure.
Becky?
Joe Muck, I love the reference. I love your
that's a great
statistics.
stat.
Being a statistic guy, 10, and the number 10, if something's not a 10, then it's not perfect. When you're putting a purchase agreement together right now, you need to be pre-approved, and that's where Becky comes in. If you're not pre-approved and that seller gets that offer, it's not going to be a 10, right, Becky?
No, it's not going to be a 10. It might not even be a 5, okay? Because you don't want to work backwards in this kind of market. I mean, we preach week after week after week, you have to be prepared. And it's not just writing something on a piece of paper. And sometimes pre-approvals take more than 5 minutes to do. A lot of times people will call, give us their information, and they want me to bang out this pre-approval that they're approved for $500,000 right away. And sometimes it takes time because if they're self-employed, they had some other situations happening on their credit that we have to kind of undo. So sometimes it will take me maybe a full business day just because you can't rush it, because I do, and Capital Mortgage Funding is going to do the due diligence up front, because it does no one any service to give someone a pre-approval letter on a loan that's never going to close, had someone taken the time up front to do the research. So we take our time, we make sure it's right. Now, we're not taking 87 business days to do it, but sometimes if it's a little bit particular, we will let everyone know, hey, this is going to take a little bit more time. I'm going to need your income documents because I can't just take your word when we're dealing with hundreds of thousands of dollars.
This dreadfully low inventory, Joe, is making real estate agents dive into that purchase agreement. As Harry mentioned, that thing better be written really tight, but more importantly, adding the additional language, because you've got the escalation clauses that have to be in play now. And your clients have to know where their limits are, where their boundaries are. Because, Joe, it's going to take an extra $5,000 or $10,000, maybe over everyone else's offer to get that offer accepted.
Yeah, when there's no houses, when there's literally 7 listings in Howell, if you're looking in the Howell market, there's 7 houses to go look at. If there's 30 people, there's only 7 houses. I mean, if there's 8 people, right? One person is missing out no matter what. And guess what? Those 7 houses aren't the same house. So they're not the same price. They're not the same for everybody. So that means your market is so tight. You are almost guaranteed to have to go over ask. And, I'm working with some clients that they don't have the ability to go over ask. So we say, hey, wait 7 days. Because if we go out day 1, odds are, just because we get the first offer in, the agent's going to want to hold on to it. couple years ago, a lot of agents were still interested in, hey, I got a good offer, let's get it written. Nowadays, everybody wants to wait at least another couple hours to see if another great offer comes through. So you got to have escalation. You got to know what you're doing for sure.
Hey, Harry, just a couple of years ago, we thought people were out of their minds for going 5, 10, 15,000 over. Now they're sitting on $30,000 or $40,000 of equity if they bought the house 3 years ago. So you have to know the marketplace. You have to have a roof over your head, and you have to know what your limits are. But we lend money on the appraised value. So again, you can put less money down on a house and maybe make up the difference if you're creative.
I think
That's a
what's
great point,
going on.
Harvey. To kind of draw attention to that. What does that mean? Okay, you're buying a house for $100,000. Okay, and the house appraised for $95,000. Okay, well that's a $5,000 difference. So right away we have four options. We're either going to go back to the seller and say, hey, this house is not worth what you said it is. Okay, they're going to say, yes, it is. Kick rocks. Okay, so that option's no. They're not going to reduce their price. They're going to say, come up 5,000. Well, let's just say your buyer that you cannot come up 5,000. Okay, well that option's out. The next option would be, can you meet in the middle? Will they eat 2,500 and the buyer eat 2,500? No, no one's changing. So then the only other viable option is to get additional comparables of recent sales in the area. We would send that to the appraiser to see if they're willing to look at that data to reconsider buyer value. Does it happen? I'll let Harry take over that element of it. But that's what happens if the house does come in a little bit lower in that situation.
Yeah, you have to know the game that you're playing, the football reference and the situation, and we're going to keep it low key. We're going to keep it calm today. When there are multiple offers in and somebody goes ahead and they overbids on a house and the appraisal doesn't come in, there are those options, but we could always try, and it's called an appraisal rebuttal, a reconsideration of value on that property. It might not come in at the purchase price. If you really want that house, you're going to have to bring in the difference between the agreed upon purchase price and the property value, what it appraised for. So you really have to know the situation going in. Multiple offers, the area, if there's only 5, 6, 7 listings in an area and there are 10 offers put in on one house, well, you're going to have to go above. And that's where we are at right now, Harvey.
Joe, I just don't see them happening anymore. Great points, Harry. 1,000%. That's the way a regular market works. And in most times, that's how the market works. But Joe, Joe's talking about 7 or 10 listings. Joe, you said Livingston County and Howell. I know, I'm feeling the pain. I've got clients literally, I think they're up to a dozen offers now. There's 10 to 21 offers every house that anyone wants to touch. And that's going from 200 up to about 400. So there's no doubt, Joe, some of these areas, I don't think that game's in play anymore. Those sellers want to know this is the deal. And if you're ready to make that deal happen, let's go. Let's sign up and we'll go for it.
Yeah. And this talking about appraised value is like so important because a lot of times now, again, it started 4 or 5 years ago with people writing these appraisal guarantees, appraisal gaps, appraisal bridge. It's all a different name, but basically saying that you're going to cover a difference on an appraisal. But the language there is so important when you're writing the purchase agreement because you can write it one way and it just means you would go X dollars over the appraisal. You can write it another way to say, okay, it has to still appraise at this value or up to this value. And depending on how you write it, I mean, you could start seeing court cases or really angry people at the bare minimum because if you write this appraisal guarantee the wrong way, someone's on the hook, whether it be the seller or the buyer. And so it's really important that both sides knows what they're writing, reading, and telling their client because it can get hairy, no pun intended. It's definitely, it's important and it's needed, but you got to have it done the right way. Otherwise you're really going to be up against it.
Yeah. You don't want to make sure that you're writing something that, it's going to the moon, right? There's got to be a cap on what you as a buyer are willing to go up to is guaranteed value on that home that you really, really want. And part of that is that upfront conversation is when you are making these offers with a great agent like Joe, who knows the verbiage and knows how to write it perfectly, and you have a pre-approval that actually is worth the paper it's written on. It's important to know what you're dealing with and what you're going with and what that max value is. And that's why we had that conversation up front. So if you want to bring 10 grand over, we know that you can pull that trigger and we're good to go.
Alrighty. Hey, keep it here on 97.1 The Ticket, 248-539-9797. You got the Hardcore Mortgage Real Estate Business Show. Joe Muck's on with us today. Next to him, All Pro Realty in downtown Northville. When we come back, all your calls.
Hi, Harry Glantz and Dan Burke from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Alrighty, welcome back to the show. 917. If you're just joining us, it's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, equal housing lender. You can always find us at 1-800-LOW-RATE right here in your own backyard. 1-800-LOW-RATE, the best mortgage banker. Deal with real experienced, knowledgeable pros. And we got Joe Muck on from Next Home All Pro. And in the break, Joe, I loved it. We started talking about some knowledge and experience and how it all sort of plays, and how it's important to have really good mentors in this industry, because we learn and you're always constantly learning. Sometimes you run into a purchase and bam, there's something that's never happened before. And you got to know how to react to those things to keep it all mellow and they keep good vibes going for the sellers and the buyers.
Yeah, absolutely. I mean, it doesn't matter if it's your first day or maybe your last day in the business, you can always learn something. We always have a little unique circumstance. While a lot of, quote, deals are run of the mill and it's, same old thing for us, you definitely run into some new stuff, especially with some of the verbiage that's being used today. And having a good, mentor, having a good broker, people like them who's going to guide you through, because these are legal contracts. These are binding contracts. You can't just be willy-nilly. You can't just say you're going to do something and then decide not to. You can't just approve somebody because they called you and said, I make $1 million a year, and say, great, then you can buy a $2 million house, right? I mean, we're all working together to make sure that these things are happening. And when someone has a lack of integrity and doesn't do the right thing, everybody gets hurt, not just one person. These things are domino effects, buy and sell, and somebody else can't buy and sell and somebody else can't. It just keeps going. It's insane. It's sad when you see those things happen.
Yeah, I think it's definitely you can't fake it till you make it in this business anymore. Okay. Because it's eventually you're going to get weeded out. Right. So everyone started somewhere, and we were kind of talking that in the break where, you have that person that brought you in, shared knowledge with you, but you also kind of take what you want from that person, and you're going to decide the kind of business person that you're going to be, whether real estate, mortgage, or in life, right? And I want to surround myself with people that are doing better than I am, right? Because you always want to aspire to be better, right? I want to surround myself with a great circle. We're talking, everyday growth, trying to make you be a better person. And at the same time, it's nice what Joe's talking about, where you come across that unique situation. I should be so fortunate to come across a situation that I have an answer for everything. Okay. I know I'm not that cool. So it's nice that I can have someone like Harry or Harvey where we can go and be like, hey, this is kind of unique. I've never seen this before. And I value their opinion because we're all in it together, and they're good people, because like you said, integrity is everything. And I started in the business right before, maybe like a couple, 4 years before the housing market collapsed. And I learned really quick the kind of person, if I was going to continue in this business, who I wanted to be and who I did not want to be. And it was ingrained in me very, very quickly. And those either made it or they didn't make it. And it weeded out a lot of the shady people when the housing market did collapse, obviously. But I took those tools with me and I added to them. And that's what Joe's talking about, you start somewhere and you add to it. And the point is to find professionals that have a good heart, that are going to treat you like family, because anyone can write something on a piece of paper, but you need to be with someone that's going to fight to throw you over that finish line should it come to that.
Harry Glanz.
Yeah, I think it's very important that when you're getting in any kind of business or any kind of transaction, if you're getting in business, everybody wants that secret sauce. They want to know what to do. What do I do? How do I go about this? I took a different approach. It's what not to do, who to stay away from, what kind of business people and transactions do I need to stay clear of. There's a saying, there's never a good deal with a bad person. So when you're getting in business with somebody, when you're doing a transaction, when you're looking for tips, it's what do you want to stay away from? So Harvey Freed, in our industry, and Becky and Joe, we've learned a lot by doing things differently than other people and doing not the same thing and making the same mistakes over time. There are certain processes we have to go through. Do you think, Joe Muck, that Becky Alley wants to ask for every little document from every borrower that she has? The answer is no, she doesn't. But there are documents everybody has to provide. And there are certain processes in place. But you know what? We're going to get it done. We always do. Saying is, and I'll leave it at this for right now, good loans always close.
It's always a good one. What not to do out there. Hey, Joe, definitely first time buyers are getting into the mix of things. Boy, this pandemic, they're definitely seizing the opportunity. As first time home buyers are making up somewhere between 35 and 45% of the purchases. But again, not to say that other families haven't taken that appreciation and said, wait a minute, it might be time for me to downsize. Maybe I'm not empty nester or something, but not enough of those empty nesters are definitely putting their homes on the market because, Joe, as we know, they have nowhere to go also. So now we see these offers, with generally speaking, after closing 30 to 60 days of some free occupancy or occupancy. Joe, people are scrambling to get these houses.
Yeah, well, I'll tell you, and I actually just posted up a video not too long ago about this. I really think in 2021, we're going to see a contingency to sell. In other words, I'll list my house and I will sell it once I've found a house. Because when I throw out these numbers, I'm putting them out there in some excitement, but it's also, it's like a dichotomy, right? I'm excited about the hot market, but it's also a tough market. So, if I have, again, someone who wants to buy, and we know that there's a handful of homes hitting the market every week versus dozens, then that person might not have a place to go. And even the 60 days free occupancy may or may not get it done. So I really feel we're going to see a lot more of these contingent on the sale of my home as the listing side. And it's an option that's out there. It might limit your buyer pool, but it is an option that's out there. So again, knowledge is power, and knowing that's an option and knowing how to write that into your contract is really going to be important for this year.
Hey, Becky, the median asking rent in the country is $1,190, just under $1,200. Boy, you can buy a pretty decent house for that and get a piece of the American dream.
I would say yes. Now is the time to stop paying someone else's mortgage payment. Obviously it's historical lows. We can't say it enough. And to piggyback on what Joe was saying, I've actually have 2 transactions where it is contingent on the seller selling their home. So they have to protect themselves. I mean, one of them is moving from, I think, Washington to Michigan. So obviously, we can't put the cart before the horse, so it's like they need those proceeds to sell that house, and they're having a hard time securing a home in Michigan. So they have this offer pending in Washington, but we're stuck because they can't secure a home in Michigan because it is so tough. Plus they're out of the state, so it is tricky, so it comes down to, you got to fight for it. You got to stay on it. And yeah, Harvey, I mean, why would you continue to pay rent if you do not have to? With the understanding that, it is a tough market out there, but okay, like you're going to spend more money over the life of the loan or over the next several years, not investing in yourself. It's time to invest in yourself, in your future, in your family. And we're here to help you, obviously. So.
And it's a tough rental market. And also a lot of landlords are asking for harder conditions than you guys are asking for.
Wow.
I've seen
like
where
what?
somebody
I need to hear this.
I've seen literally helping somebody. They wanted to see that this person made $65K a year, had a 640 or higher credit score, had no bankruptcies. I mean, it was all the stuff that you guys would want and more. And so, to rent and have that issue, to me, it doesn't make sense. If you've got all those things, everyone's got a circumstance, everyone's got a reason, but for the majority of people, if you can follow in that, buy, don't rent.
All righty, folks, keep it here on 97.1 The Ticket. It's 9:26, and it's sort of a lovely day outside. It's absolutely freezing out there, but as we mentioned, the real estate market is hot, hot, hot. So definitely, we come back, we'll give you more insight. Keep it here, 97.1 The Ticket, 248-539-9797. We'll be back.
Hi, Harry Glantz and Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
back here at 9:30. A nice day outside. Why? Because it's not snowing quite yet. I got a great story about snow I might get into if Harry lets me talk about it. But first, we're going to talk a little more mortgages and real estate. Got Joe Muck here. Hey, Joe, Next Home All Pro Realty in downtown Northville. We're talking about there's not a lot of inventory. You better hire the people with the knowledge and the experience. You better communicate. I'm waiting for my phone to ring all weekend long from a listing agent saying, hey, Harvey, are these people approved and can they close in 30 days? Because we love hearing from real estate agents. We want better communication out there. We want to hear from you at 248-539-9797. Just want to dive back in. Becky, these mortgage interest rates, again, still at all-time lows. Great opportunities for families to consolidate their debt, drop their term down. What else, Becky? You can get rid of PMI also.
Yeah, I mean, don't miss the bus. Okay. So, even if you bought your house a year ago, 6 months ago, everyone's on the table right now. Maybe not 6 months ago, but a year ago for sure. Because of the housing market increasing, the homeownerships that are not planning on moving, the ones that are staying, you can now dip into this equity to help make your home exactly what it is. Or I have a friend of mine, they're going to pay off an RV or whatever it is, like they just bought a fifth wheeler, right? They're taking that biggest asset they have with these historically low rates. It's basically like free money and they're making it work for them. You have to do it if you can. Now, does it make sense for everyone? No. For example, I have another client of mine, long time, done several of their loans. They're down to 8 years, okay? Where the rates at versus what they have time. Even if we put them on an 8-year to 8-year, it still didn't make sense between the costs and all that other stuff, right? So we're not here to just say yes, right? We're going to give you our opinion. We're going to lay it out for you. Ultimately, it's going to be your decision. But if it doesn't make sense, I'm going to tell you no. It doesn't make sense because it's all about the longevity and what your goals are. And if you're trying to pull cash out, okay, let's do it because you're not going to get a personal loan. You're not going to get a home equity line of credit for what these rates are. Fixed rates is where it's at right now. And let your money work for you right now, especially if you have that equity in the home, which chances are you probably do.
Yeah, well said. Hey, let's move out to a call this morning here, 248-539-9797. If you'd like to join the show or text us. We got Patrick out in Novi. Good morning, Patrick. Thanks for calling in. What's your question, sir? Mm-hmm. Joe?
Highly unlikely. Obviously, the contract, again, it might matter. Generally, we don't give 3 full days, but the inspection is always the biggest contingency to get past. It's the number one thing. Honest to God, if a light bulb was out, she could have said, I don't like this inspection. I'm out of the house. Or a condo, I should say. I'm out of this contract. So that's kind of like the out. And in this hot market, especially when people are paying over asking, they are backing out sometimes because a step needed a repair or something like that. Buyers feel like, hey, if I'm going to pay X dollars plus, then I want perfection. And you're not going to get perfection even in a brand new construction, let alone existing. That's hard to get out. But yeah, unfortunately, she's probably not due any money on the earnest money. She probably has no legal ramifications. And it's probably just best to get back on the market, get 5 more people in and 2 more offers and move on to the guy or gal who wants the house for real, condo for real.
Patrick,
Mm-hmm.
Patrick, it's a great call. Go ahead.
Yeah, she signs off and then back on market and probably gets another offer, by the end of the weekend.
She already had 3 offers. She took the wrong one. Hey, Patrick, thanks for the call. It's funny because I think it was. Appreciate that, Patrick.
Thank you.
I'm telling you guys, I had a client who made an offer on that house, and it was because we got a call back on it and during the week. But our clients already found another condominium within days, and they went, Joe, from a unit because there's not a lot out there. They went from a condominium that was more of an apartment conversion to a true condominium. So again, sometimes what you don't get, they were excited about that first one. I said to him just the other day, because we did find another place, we're moving forward. I said, is this unit that now we're moving forward with, is it way better? They said, boy, it's not even close. So sometimes things work out your way. And, the home you don't get ends up, that's okay. Joe, we always say it'll work out in the end for a family if they hang in there. But again, multiple offers, changing your strategy, and maybe even working with some different people could help you maybe get your offer accepted.
Yeah, absolutely. And in fact, I have a client in a contract now because that just happened. Our offer did not get accepted. And then he reached out to me this week and said, hey, that person backed out on inspection. Are you still interested? Now, my client who's been looking and looking and looking has a deal in place. So it happens all the time. It's unfortunate. It's an emotional roller coaster. And that's where us professionals come in, because we try to take the emotion out. We try to handle that for our clients and help everybody and close this deal for everybody. So, it's tough, but it's the reality.
Yeah, like the reason why someone would back out, I mean, obviously we don't know the situation for the caller, why they backed out of that home after it was accepted, right? Did they have buyer's remorse immediately? Was it really just because something was truly wrong with the house? I mean, we never know what that situation is, but kind of for the listeners out there, when you have an accepted offer, that inspection period is your last out before you're going to start having your money be on the line. You obviously, want to do your due diligence as the buyer to make sure, number one, maybe their financing, whoever pre-approved them, maybe the financing wasn't under control and they needed to do what they had to do, or maybe they just didn't want the house anymore in general. So that would be your last ultimately out to get out of something. And then after that, you're going to put earnest money deposits down, and you have to do your due diligence as the buyer to uphold your end of the contract for the sellers.
Yeah, since we're doing telemedicine. Yeah, since we're doing telemedicine here. Can you hear me?
Hey, Harry, there you go, Harry. You're back there.
Can you hear me, Mike? Can you hear me now? Okay, so since we're all doing telemedicine right now, the buyer suffered from, like Joe said, a severe case of buyer's remorse. That's what happened. You just got to put it back on market and move on. Cut them their check back. Sometimes the best deals you do are the ones you never do. So
that's what I was trying to say, Harry. So eloquently said. Thank you.
Yeah, let's move on. Just move on.
Yeah, we are going to move on because there's so many great things going out there. Again, call Capital Mortgage Funding and take care of that refinance. We have helped so many families recently. You might have thought you overpaid 3 or 5 years ago on a house, but you didn't. And now's your opportunity to get rid of that mortgage insurance. Take advantage of the equity in your home. Call us at 1-800-LOW-RATE, the best mortgage banker, and you'll save a lot of money. We always deal with the professionals. That's really key. I mean, does your agent know the difference between an ease, a soffit, a fascia board? What's their difference on community well versus a well? There is still a lot to know out there in the mortgage and real estate world. So we always tell you to seek that knowledge out. And Joe, I want to dive into something that came up. Oh, and let me throw another thing out there. If you are buying a condominium and someone backed out, you might want to do some due diligence of your own. Check out to see if your condominium project is a non-warrantable condo. If you don't know what that means, you're going to find out if you're selling it, because that is also one of the reasons why sometimes people will back out. All of a sudden they find out that the community they want to retire in and live in is full with a bunch of renters. Nothing wrong with it, but renters don't always take care of the project as well, Joe. They don't pick up their garbage. They don't really own it. They don't have a stake in it. So, Joe, that sometimes plays in the purchase world too, dealing with that knowledge and finding out some other things about real estate or the house you might buy.
Absolutely. 2 years ago, I'm helping a gentleman. He insisted on using his all-time lender, not one of mine, of course. And we're 2 weeks away from closing, and come to find out it's a non-warrantable condo. That particular lender won't do a deal on it at all. No way they're waiving it. And it had to do with the fact that they allow greater than like 20%, rental in the condominium complex. And actually about 40% of the condominium complex is rented out. And so, last minute he had to switch lenders or pay cash. And, we got it all done. But the point is, when you're looking at condos or co-ops, make sure you know the difference between those two, and then make sure you know what you're getting into, and talk to your agent and your lender, and make sure before you get too far that you're actually going to be able to close this deal, because it's really important, minor detail, yet it's the biggest part of the whole transaction.
Becky, Ellie, I want to go into FHA mortgages and purchases. We're coming up on a break here, so let's just go 30 seconds, then we come back, we'll follow up. Becky, the cool thing about FHA mortgages It's just as easy to get an FHA mortgage, and more real estate agents better start listening and finding out about it, Joe, because there's no doubt that that purchase can close just as easily as a conventional loan. And it's key because the loan amount's $356,362. That's not for people who don't make money. There's reasons why a family might get an FHA loan. And when we come back, we're going to talk all about the reasons why you can buy 3% down, 3.5% down, 0 down. Keep the money in your pocket. All right, we'll be right back.
Hi, Harry Glantz and Dan from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Back on there, 9:44. If you're just joining us, you got to tune to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. That's where you can find us. 1-800-LOW-RATE, the best mortgage banker. Always ticket text us or call in here, 248-539-9797. We're going to dive back into a couple conversations, and one's always the FHA conversation. But a real quick story. Yes, I do want there to be a 6 to 12-inch snowstorm soon, and enough of these 2 inches, because John Kolb and I at the office, we wanted to support our local businesses here around and support local businesses. I happen to purchase mine over at Weingart. I bought the killer snowblower this year, Joe Muck. And I'm telling you, I haven't even started the thing yet. I'm still pushing snow out here. But funny story out there. If anyone bought some equipment, it's always like when you buy the big snowblower, it doesn't snow. But I promise you this, that sun will be out in the springtime. So if you need a new lawnmower, definitely go and support some local businesses and go buy your equipment, because It's going to be sunny out eventually out here, Joe. But hey, Joe, unlike other years, Joe, we don't need the springtime to get this home buying season going. It started, it was in December. It didn't even start this year. It started last year.
Yeah, it never ended. But, we definitely, ironically, the last 3 years, this is the third year now, January has been the new June, so to speak. It's been an explosion. Basically what happens, New Year's happens. So we take that first week off. Kids are still home from school. People are still doing some vacations. And of course that was a little less this year, thanks to the old pandemic, but, still happened. And once everything settled back down, people get out there and get after it. The market has been hot. It hasn't slowed down. And, if you're selling and you're buying, it's a great time to do it. And I know you want to talk FHA, and I'll just roll right into it, man. FHA, you guys can talk about the qualifications and everything like that, but I can talk about from the selling and buying side. All these listing agents are always worried about the FHA inspection. And it's a safety inspection. If the house isn't going to blow up, it's pretty much going to pass. And even if they hit you for something, it's so simple. At the end of the day, the title company is going to cut a check to the seller, and that person is going to walk away with their money. Doesn't matter if it's a cash transaction or an FHA transaction. And I think that there's this stigma that maybe comes from some time in the past around these FHA deals. But I'll tell you, it's really unfortunate, because to your point that you started to say, and I'm sure you're going to hit on, FHA maybe used to mean rough credit, or maybe used to mean something else. Today, it has to do with debt to income ratios. It has to do with cash to close. It has nothing to do with anything else. My first house, my house that I'm in now, we almost did FHA just because it made sense from PMI, because I wasn't putting 20% down. So we had to figure it out. Was it best to do FHA? I was putting 5% down, and we still almost went FHA. So it has nothing to do with all these other things. We had over 700 credit score. So you guys hit on that, but man, I'll tell you, I'm just tired of hearing about they don't want to do FHA. They don't want to do FHA. The seller doesn't want FHA. It's crazy. 65% of my business is listing. I'll take FHA, VA, conventional, cash. I just want to close.
Right.
Yeah, like that.
Joe,
Yeah.
You hit the nail on the head for me. Doing it a long time.
That was perfect.
Been saying it for a very, very long time. Money is money. What people shouldn't care. We fund with our own funds. After we pull the loan, either service it or sell it off, that's nobody else's business. We're still wire transferring our money there, and money's money. The reasons why people don't want to go FHA are so antiquated. It's older than Methuselah. Okay. So I had to throw that out there. Been thinking about that one for a long time. Older than Methuselah.
Okay.
So my point is that when I hear somebody doesn't want to go FHA out of a realtor's mouth, that means they're hiding something in the house. Because unless there's something really wrong with the house, anything that would come up would be a health and safety issue, a hand railing, electrical plugs, GFEs, scrape some paint, no big deal. All these are very, very fixable. And Joe, I'm glad that came out of a realtor's mouth. Thank you very much.
Well, and the majority of the things that are going to come up in your private inspection. I think the one exception might be this paint chip thing that every now and then comes up on the FHA VA deals. They might want some paint chips fixed for one reason or another. That's the only thing that probably, as a buyer's agent, I've never said, hey, we just did our inspection. We need you guys to patch and paint these couple of little areas. Other than that, handrails, GFIs, smoke detectors, these are things that people want in their home before they move in anyways. And while they're kind of like nickel and diming type of things, we're going to ask for them because we want to move in and have a safe house when we move in. So it doesn't matter, again, even if we do a cash transaction. So the only reason to even consider these other options besides the FHA, option is really going to be if they're waiving inspection with it. Because otherwise we just need to know we're going to get to the closing table. Who's got the best deal for the most money that can close the fastest? And it does not mean non-FHA, man. It just drives me crazy. Got me fired up, guys.
No, it's good stuff. Hey, we got some open lines. 248-539-9797. The Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding, or catch us at 1-800-LOW-RATE. That's the best mortgage banker. 1-800-569-7283. Interest rates are all-time lows. We got a pandemic still in play. Also, volatility in the marketplace is never ending. Economic data really shows us what's going on that side of things. We lost something like 10 million jobs during this pandemic. So to have last week's job report to say we're short 49,000 more, it's not a good sign. Again, you got to follow the MBS, the mortgage-backed security marketplace. And let me tell you, the market is extremely volatile. Again, talking this morning with Joe Muck, great real estate agent. Joe, you said some things that, again, we appreciate because it's just consumer advocate stuff. It's the stuff that the families need to hear out there and the real estate agent community, along with loan officer community. If you don't know the answers, find out, like you said, Joe, when the seller's at a table, they want more money netted from the sale of their house, not less. And whether the loan is a VA loan or a USDA loan or an FHA loan, whatever you might call it, that's the best deal, especially if it closes in a timely manner. Hey, Beck, you want to pick it up from here? Give me some good stuff.
Yeah, I mean, so like to piggyback on this FHA topic before we wrap it up, FHA is going to allow you to put 3.5% down. And in a situation like we were talking about, it's not always credit. You don't have to have bad credit for FHA to be on the table, okay? Because at the end of the day, money's money. And if you're trying to push your price point into whatever it is you're trying to do, FHA is the vehicle to get you there, especially if, for example, you're married. Let's just say your spouse, maybe they can't go on the loan for whatever that reason may be. That would allow you to now go into this FHA loan, push your purchasing power to the max, much higher than you would be able to conventional. It's still a great loan. The payment's probably going to be cheaper because the PMI is going to be less than it would be on a conventional loan, depending on what their credit score is. So there's nothing wrong with an FHA transaction. I literally just talked to someone that has an 800 credit score, and like Joe said, FHA is on the table because we are here to explore every viable option to make sure that your offer is going to stand out and it's going to close. Again, it doesn't matter what you write on that piece of paper, it has to close. And that is our job, to give you that option and give you our expertise to get you to that finish line. And Joe is there to pick up from that part. You know, we did the due diligence up front, did the pre-approval, and now it's Joe's turn to write that excellent, well-executed contract.
Hey, let's go to Harry then, Joe.
All right, I think that's the key here. I think that's one of the 10 bullet points that Joe was hitting on at the beginning. 10 is the magic number because of Tom Brady today. The transaction has to be a 10. And what is a perfect transaction? A perfect transaction is when a buyer and seller can get together, agree, consummate the transaction. Everybody shakes hands, hugs it out at the closing. Yeah, Harvey's still doing that at closing. So is Becky and so is Joe. And that's what makes the whole transaction work. So it can be done. It's being done. Speed to respond will always be there. We're closing loans in less than 30 days. But the object is this: if you're selling your house, do you really want to be out in 30 days? So you really have to evaluate each transaction individually, make it a 10 for the buyer, make it a 10 for the seller, and we'll just do all the paperwork for you. Right, Joe?
Absolutely. You've said it all. So I just want to remind everyone, if you're in an FHA deal, you can actually refinance too. So with these low rates and great PMI, you know, give these guys a call. Harvey, I'll send you my Venmo so you can pay me for that plug. But seriously, you know, it's a great time for whatever it is that you're doing out there, buying or refinancing, selling, all the above. And we're all here to help. So, you know, let us know how we can do so.
Fantastic. Way to wrap up, guys. All right. If you guys want fantastic rates, check out our super rates at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. You're going to save on money if you want that refinance done. Deal with the real professionals. We'll get it done for you. Again, want to thank everyone here. Joe Muck, of course, you can catch Joe next home All-Pro Real Estate. Joe Muck, you're a great dude. And guys like you and women like you and everyone out there in the real estate community, listen to what Joe's telling you. You're going to have a great year in 2021. All right, we got Pat Caputo coming up with sports. Keep it here on 97.1 The Ticket.